All right, Aristotle, I think this next one is on you, and this is the tough one, setting and managing expectations.
Yeah, right. Yeah, thanks, Leah. Yeah, thanks for setting it up because those are good characteristics for people to understand what a seller's market is. Some people don't really fully understand what it is, and so I'm going to talk about setting and managing expectations and like what I see, and I'm sure the same thing you guys are seeing and what we talk with our members about. So let's go ahead and dig into it. It's pretty straightforward information here, but let's go ahead and get into it here. Do I need to advance or do you need to advance here, Leah? There we go. All right,
Sorry
so
about that.
that's okay. So low inventory means that you need to keep an open mind when it comes to selecting a market. So a lot of members will come to us and they maybe they just watched the webinar and they say, I really like that market, I want to buy a house there. And then maybe that was like a week ago, and then they watch the webinar, they come to us, and then all of a sudden there's nothing available, or they got to wait a long time. So it's important to keep an open mind and kind of have some options open to several markets. I know all of us here at the company, we usually, when we're talking with you, when we have a strategy session, we usually do recommend, looking at 3 or 4 different markets, and it's important now to do that because if you're looking at maybe buying 2 or 3 or 4 homes this year or whatever your goal is, there might be maybe looking at market A, and market A doesn't really have anything for 3 or 4 weeks, but market B does at the moment. So just keep that open because deals are hard to come by, like Lee was saying, and I think it's important just to keep your options open. That's what's so great about our network is that we're area agnostic, so we are unbiased on where we recommend our clients. I mean, they're all really good markets, and so it's just kind of what's available now. So the second bullet point talks about cash flow returns are not what they used to be. Kind of what Lee was mentioning, the returns have gone down a little bit. When I talk to people and they say, hey, I'm looking for the 25% cash return deals, well, from a turnkey or a real property standpoint, those don't exist. I mean, now if you were to buy a property yourself at a discount and do the work yourself, perhaps you can get to that type of return, but we're not really seeing that. We do have a few markets like Baltimore, Chicago that do have higher returns, double-digit cash returns. But for the most part, yeah, it's not what it used to be. And so just going into that, just know that, or just expect and realize that you're not going to get that necessarily in Dallas or Florida. But what you are going to get is you're going to get a house. You're going to get a property where you can park your money and get a decent return. And these hopefully beat the stock market, or you should beat the stock market. Delays with new construction and rehab homes. This is a big one. I think Leah talked about it a little bit too. So we are seeing delays with new construction and even rehabs. The materials, the labor, all that stuff is being delayed. The cities, a lot of these markets that we're in, they are the courts are still closed, or they're not operating 100%. So whenever a new construction, let me back up. A lot of our new construction homes are infill lots. And so they have to go to the city to get permitted first before they can build. And that could take several months, but it could take longer. So if our team says 5 months estimated, I just maybe project 6 months because it could take longer. But also just know that when you do get into a new construction property, just know that anything can happen, like Murphy's Law, right? Anything that will happen or anything that can happen will happen. And it's nothing but the truth. I mean, it's not going to happen all the time, but we've seen delays. And so just bear with that and just know that that is completely normal. Same with rehab homes. I mean, most rehab homes are done when you go into contract, are usually done within 30 to 45 days. But again, there could be materials that are delayed. I mean, there's I was reading that in Canada, there's big tariffs on the lumber that's coming into the United States, and that's slowing things down. So anything like that that's happening, that's gonna come down and trickle down to everyone who's buying homes. So just keep that in mind.
Aristotle, what are some of the risks that you're kind of cautioning people about with the delays? I mean, are you seeing or hearing of risks with financing? I mean, how can somebody kind of be prepared for what that translates to?
That's a great question. I don't know if you guys are seeing this on your end. I'm probably sure you are, but I've seen where a member would do like a rate lock on a house, right? And they're told that's supposed to close on a certain date, and then it doesn't happen. And so I wouldn't say it's a risk necessarily, but just know that it could cost you a little bit more money to relock that rate again, because if for some reason the lender it says, hey, we're set to close, but the builder or our property team is rehabbing the house says, hey, we can't close for another 2 weeks or 3 weeks because of this or that, then you just have to be aware of that. So so I would say it's not really a risk, but what do you guys seeing out there, Leah? What kind of risks, or what are you seeing as far as delays go, or
I mean, I
things like
think that's
that?
a really great point about the rate lock. I mean, so basically when you lock a rate for closing, it locks it for 30 days. And after that point, well, usually 30 days. I think there are
Yeah,
some different terms, but once that lock expires, you have to wait an additional 30 days before you can lock again. And you have the option to extend your rate lock, but there's a daily charge to do that. And so
that's right.
I mean, I've gotten stuck in this personally. If there is a delay that is kind of unknown how long it's going to be prolonged, you're in this weird limbo of like, well, do I pay to extend it or do I just let it expire? Because is the builder going to turn to me and be like, we're ready to close, but I haven't, those 30 days to relock haven't expired. I mean, it can be really stressful for sure.
It can, but just so I think going into that, knowing all these things, just be prepared, because I mean, again, we're not talking a ton of money, but it could cost
Yeah.
you, $800 to relock something, or $500, and so, yeah. What about you, Joe? What are you seeing out there?
Well, sometimes investors miss a desired period, like they were hoping to close in August because it's easy to find tenants during that time than the summer months. And then the close is delayed until right before the holidays, and that's a really hard time to find tenants. And
Yeah.
so the delay kind of messes them up in timing.
Right, right, right.
What do you
So
tell people on that, Joe? Do you think that delay does that like ruin everything? I mean, what's your kind of advice to people when the closing falls in an unoptimized time?
Well, it doesn't ruin it. It depends on where you are. And uh, it's harder to find tenants over the holidays because people just don't move around Thanksgiving, Christmas, and New Year's. But in the Sun Belt, like Florida, it's not as bad. Just the weather's still nice. But if you're in Chicago or someplace where there's ice on the ground, no one's moving. So it kind of depends on the market you're in.
yeah, fair enough, fair enough. Okay, so let's go to the next slide here. So there is no such thing as a best market. So a lot of people I speak to say, hey, what's the best market to invest in? And again, like I said earlier, we're area agnostic, which means we're open to every area. All these markets that we're recommending, they're all really good, and they all have their different quirks and different economies and different price points. And so I think it's kind of what I was saying in the first slide, that keep an open mind, but there is no best market. I think they're all really good, and I think the most important takeaway that I think everyone should really learn from this webinar is that in today's market, it's not about getting a discount or getting a good deal. It's about getting a property, right? Because if you get a property, it's like almost like winning the lottery. You're like, oh my gosh, I won, like I got it. And for those who are on the webinar who are buying their primary home right now, I mean, good God, it's crazy out there. I mean, not just where I'm at and Joe's at, but everywhere. All pretty much major cities that are having crazy price bidding wars. It's insane right now. So again, just be fortunate that you can get a property. But yeah, I mean, is Charlotte better than Atlanta, or is Atlanta better than Dallas? No, they're all different. And that's why we have all this different great information to educate you guys on what we feel is the pros and cons of each market. New construction homes could increase in price before you put one under contract. I've seen this before too. So it could happen to where you are on a wait list, or maybe what you're talking with one of our property teams, and there is a little bit of a wait list, maybe 20 or 30 days before they have available lots, and all of a sudden the price goes up $5,000 or $10,000, and people get upset. They're like, hey, I was going to lock in a property. It's like, well, that is unfortunate. That's the climate we're in right now. So just, again, it doesn't happen very often, and it doesn't happen when you're in a contract. If you've locked in a deal, that's a done deal. Okay, it's not going to increase when you're under contract. But before you go into contract, there could be that issue there where it could go up before you even buy the property. So again, just expect that on a rehab home. Have you guys seen that on any rehab homes? I don't think that's really happening, at least yet. But
No, I haven't seen it. I saw one scenario where, there was a delay in getting a property tenanted. They had said they were going to tenant a property before closing, and basically it got to a point where the seller was like, okay, look, we either need to sell this or you need to close on it without a tenant. That's kind of the scenario we're at. And And they played hardball a little bit because they knew that, at that point the home value had gone up significantly, and they could turn around and sell it to somebody else, a retail buyer, if they wanted to. But I think to your point, it's probably a lot more frequent in the new builds.
Yeah, yeah. And kind of like what Leah was saying in the beginning too, there's no bidding wars with Real Wealth Network. So we don't have, it's first come, first serve, but our team is not going to send out, 5 contracts to people and say, give me your best price. It doesn't work like that. So that's a great thing about working with our network. Okay, some property teams have wait lists. They have waiting lists. So all that means is that you just have to put your name down, and as soon as something comes along, they will send it out to all of their wait lists. And so you just have to wait. And again, what I was saying earlier is that if we have a webinar, let's say like when we have our Huntsville webinar, and you didn't watch it in time, but maybe the week after you were able to watch the replay, and you said, hey, I really like these houses, I want to buy one. All of a sudden, you contact your team and they're not available. Just be patient. Just know that there's going to be some kind of wait time with that, even with new construction. So remember, land. A lot of these markets we're gonna have lots of land, but they can only build so fast, like Leah was saying. And then the very last bullet point, I think, is probably one of the most important of my presentation, is be patient. I can't stress enough to be patient, not just with the homes, but be patient with everybody that's involved with the investment circle. Be patient with your lender, because we know appraisals are taking a longer time to get back. Be patient with the property managers that you're talking to. Be patient with the property team. Everybody needs to be kind of just be patient with everything, because I've seen it over and over. People are wanting this or that. They want it fast. California, for example, the people in California want things done yesterday, and down in the South, they don't move that fast sometimes. So you just got to work at their own pace. But doesn't mean anything's wrong. Doesn't mean that you need to give up and throw the towel on. It just means you just got to be patient. So that's really about it on my end. Do you guys want to add anything to expectations, or anything what you guys want to talk about?
I want to share real quick one thing. I know I had shared this with you guys. I had a client who was really, so on your note of being patient, I had a client who was patiently waiting for a team to have inventory, and just sitting by their computer waiting for the inventory to come out when they sent it once a week. And they were on the ball. They literally hit reply, I want to reserve, and had it timestamped a minute after the distro went out. And that wasn't enough to get them the property. And so I actually reached out to the property team just to say, like, hey, because I saw the timestamp and was like, holy man, like a minute after and it's already gone. What are the chances? And she told me she had 6 replies in the first minute of sending the email. So yeah, it's nuts, but it is the reality.
I would echo too your comment about being patient, especially with lenders, because with interest rates as low as they are, a lot of homeowners are just refinancing their houses, and all lenders everywhere are really swamped right now, just trying to keep up with all the refinances. So it's important to be patient with your lender, especially.
Yeah, agreed.